Hello and welcome to Gold and Silver Assets. It's Sunday the 5th of April 2020. So we're going to start with 3 cheers because we now have over 1,000 subscribers on the channel. So it's nice to have you all here and welcome if you're new. So it's been a bit of a quiet week in terms of the paper price of gold. However, in terms of the physical price of gold, it's been pretty hectic. We've had very high demand and the supply has continued to be increasingly diminished, and that's because more and more mines are being closed and refineries are also closing, and as a result premiums remain high. But despite this, the paper markets still dominate the spot price for now. It'll be interesting to see what happens when that changes. One thing I would be really fascinated by is if we could actually have a separate chart for the physical gold price. I haven't been able to find such a thing, but it would be very interesting, and I suspect that we'd see a divergence between the two. So let's start with gold in US dollars on the monthly scale. And we remain within this uptrending channel that we drew a few weeks ago. And we've had a few small false breakouts, but note that the price has never closed above this on the monthly time scale. And the reason for this is looking back between 2011 and 2013, we've got this hefty chunk of price action here, and that is going to be formidable resistance and will be holding the paper price back somewhat for a little while. But it's interesting that we haven't really had a strong repulsion from these price levels. Price has actually been very resilient in recent times. And so what I think is going to happen is that we're going to remain within this price range for a little while until we can overcome that overhead resistance. Looking at the previous 2 months of candles, you can see that these have very long wicks and very small bodies, and so these signify indecision. The latest candle is this green candle, however, remember it's not complete. We've still got another 3 weeks to go before we see what happens there. But what we'd ideally want, if we're bullish for gold, is for this candle to close on the monthly timescale above this channel level. Then we'll be looking at some new price targets at that point. The other thing to note is that we do still remain in a strong uptrend, and despite the recent volatility, price never broke below the previous low at around 1450, and so that seems to be relatively strong support. And so I'm wondering if there is any more downside, that may well be the lowest that we're going to go. Moving on to gold in US dollars on the 4-hourly scale, price action has this sideways movement. It's not really going in any particular direction, particularly in the last week or so. This is the upper channel line that we saw in the previous chart, and price seems to be oscillating either side of that. If we are to break above this channel line in the coming week, then I'd expect to see resistance at around the 1680 to 1700 level. However, if this fails to overcome this overhead resistance, then we'd be looking at a downside target of around 1520 US dollars. Now, if it does come down to that level, then we may be looking at a consolidation area here, which would actually be potentially quite bullish because price could oscillate here, and an upward breakout would give it a lot more strength to break through that overhead 1700 US dollar level. And we'll have a quick look at the Gold Commitment of Traders report. And as we can see, we have been coming off record highs in open interest, and the commercials still have substantial short positions at around 300,000 contracts here. And given the fundamentals in gold, I'm pretty sure that they'll want to try and wind those short positions down even further in the coming weeks. And it's either that or they're going to be risking a massive short squeeze, If we do have a large drop in the general stock markets, then that may well provide them with the opportunity to exit their short positions. And that would probably bring these down to the 100 to 200,000 level. If it gets to either zero or particularly if they go long, that would be super bullish for gold. Now it's important to remember that gold is traded in all other currencies as well as the US dollar, and gold is at an all-time high in most of those currencies. So this is a chart of gold priced in the DXY basket of currencies, and the majority of that is in the euro, but it also includes the Japanese yen, the British pound, Canadian dollar, Swedish krona and the Swiss franc in differing proportions. And this chart is of the gold priced in DXY on the monthly scale, and we can see that the price has reached record highs in the recent few months. Now, looking at the longer term picture, I've drawn a line to join a couple of the lows, and then I've cloned this line and moved it to the previous highs back in 2012. And then I've also cloned it to join the midpoint of this channel. Now, I don't know how reliable this channel is going to be, but it's just something to look at because it can indicate, where we might be going from here. From looking at this channel, price seems to kind of oscillate between the top half and the bottom half of the channel. And we've been in the bottom half of the channel for quite a few years now, and we've transitioned into the upper half right now. And so I'm wondering whether we're going to be spending more and more time over the next few years in the top half of this channel. So just something to keep an eye on. I don't know if that's got any reliability whatsoever. It's just a little experiment. Moving on to silver, priced in US dollars on the weekly scale. And price remains within the channel that we've drawn here. This channel was drawn by joining the previous highs, cloning that line and using it to join the previous lows, and that allowed us to predict the recent low that we saw a couple of weeks ago. So price rapidly bounced off of that lower channel line and then bounced up to hit overhead resistance. Now, in terms of where we go from here, one question that people have been asking is, will silver go even lower, towards the $8 kind of level or even lower than that? Now, because of the speed and the strength of the bounce that we saw, that makes me think that this is actually strong support. And so I'm doubtful that we're going to break this lower channel line. We may retest it again, but sustained break I'm suspicious of. And if we look at the silver commitment of traders report, we can see a much more significant decline in open interest, and the shorts have decreased quite significantly. If we get to the level of zero, or even if we go long in terms of the commercial positions, then that would be extremely bullish for gold. So something to watch for. And just going back to silver in US dollars, but this time on the daily scale, as we said before, not much has happened in terms of the price of this metal. It seems to be consolidating in this small trading range. And there are a couple of possibilities here. One is that we have a flagpole and it's forming a flag before it makes its next move. And to be confident of that, we would need to see price break above 1480. However, I wonder, as with gold, if we do have a significant drop in the general stock market, that's going to drag the metals down somewhat. And in that case, we may well see a retest of that lower channel line. If we do, that could potentially be quite bullish, because if it bounces off there and then comes back up, we could potentially be seeing a double bottom, and that could propel it much higher up back into the top of the channel. And then we'll move to the GDX on the daily scale. And price continues to respect the downsloping trend channel that we drew last week. So again, it bounced off and we've got a long upper wick for the latest daily candle. The other thing to note is that we have a gap below, which I'm pretty sure it will want to fill. And so I would expect at least a little bit more downside here. The other thing to note is that price, although it was very, very volatile a couple of weeks ago, the volatility is decreasing and we're getting a squeezing pattern in the price, and that usually suggests a large move that's coming. If that large move is to be upwards, then we would need to see price go above 25.5 or 26. However, a drop below 23.5 would suggest a large move down. And again, because I'm not very optimistic about the stock market in general, but also some of the miners are going to be struggling because in a lot of places production has had to be stopped. That could drag the miners down, in which case I'm looking at targets of around the 12 to 13 range. So that's all for this week. Don't forget to like and subscribe, and we'll see you next week. Bye.